All right, Ken Range Theory Trader back with you for another video, coming with you with the London session Goldmine. So don't forget to like and subscribe, and let's just get into this basic London trading session setup that's going to help you put some money in your pocket. So what this video is going to cover is the average true range slash CRT, stands for candle range theory trading method, and the trading rules we need to follow, the 3-4-5 pattern, which we will discuss, and a real week of back testing. So the foundation of this method for trading the London session is going to be identifying an ATR candle range. Okay, so what does that mean? When I say an ATR candle range, I'm going to show you an indicator on some preceding charts that will show you when, in a 1 hour time period, this is based on the 1 hour chart, a pair will exceed its average true range, meaning that, let's say in an hour, a pair can typically move 20 pips. This indicator is going to show us whether when the pair moves above that average, say for 35 pips or for 40 pips or 50 pips, whatever. As long as it's greater than the average, that's going to be our signal to show us that the pair could be ready for a pullback or possibly even a full reversal. All right. So as far as the candle range theory, we're going to need a basic understanding of that. If you're not sure what the candle range theory is, or if you need more information on the average true range indicator, you're going to want to click the links in the description of this video. I have videos already on this channel do explain those more in detail. But for now, you will need a basic understanding of the candle range theory. I'm just going to go over it very simply. A lot of you probably already know what it is. You have the first candle here, which is the range. The second candle is the what I call the money candle that pokes above it and then closes back inside of it. Okay, I call this the money candle. And then lastly, this is the trading period where you just enter a trade short and your take profit is just the bottom of this range candle right here. That's it. Okay, simplest plan you're going to see, period, bar none. All right, so that's the candle range theory in a nutshell. One candle is a range, poke above the range or below the range in a long example, and then you just take the other side of that candle for a take profit method or take profit level. That's it. All right, so now that we understand that, here's our decision flow, what we're going to need for the 1 hour chart and when we're trading the London session. All of these times are going to be Eastern Standard Time. Okay, so when you come to the chart, ideally you're going to want to come to the chart really at around, say, 4:30, 4:45. This really does not take long. Okay, so the first thing, is there an ATR candle at the 3 a.m. 1 hour candle? Okay, when you put your cursor over the candle that has 3 a.m. on it, is that candle an ATR candle? And I'm going to show you this, so just bear with me, okay? Now, if the answer is yes, we continue, but if not, there's no trade. Next, is there a money candle at the 4 a.m. Candle? Did the 1 hour 4 a.m. candle poke above the high or below the low of the preceding candle and then close back inside of it? If the answer is yes, obviously that's a good thing, but if no, there's no trade. And then the last thing we do is that if we see that, if 3 a.m. and 4 a.m. give us both those green lights, then the last thing we do is just go ahead and enter the trade at the 5 a.m. hour. Now, I do apologize for that. My phone is going crazy here. Okay, so let's take a look at some rules and then I'll show you some actual chart examples. So the rules we have to follow, remember these rules are here to protect us. There's no trading until 5 a.m. Eastern Standard Time. Okay, no trading until then. If the price does not close inside the candle range, okay, it may poke just a little bit above it. It cannot exceed the range by more than 5 pips. Sometimes people say 7, 5 to 7. Use your best judgment. I like to stick to around 5 or so. But obviously, trades do need, sometimes they need a little room to breathe. That's fine. Okay, now when you enter the trade cannot break above the high or low of the day by more than 5 to 10 pips. All right, which is typically this money candle. So I'll show you this real quick. So let's say this is the high of the day right here. This price level right here cannot be broken by more than 5 to 7 pips. If it is, you're going to want to exit the trade. All right. So that's that. And ideally, when you're starting to trade, when you take the trade at 5 a.m. or in the 5 a.m. hour, you want to be out of it by 9 a.m. Okay. You want to be out of it by 9 before the USA session comes along. So let's take a look at some real chart examples. So this is from the week of January 20th, 2025. All of these ATR candles, the ATR candles are going to be on the 3 a.m. hour. Okay, all the money candles are going to be the 4 a.m. hour, and all entries are going to be on the 5 a.m. hour. So this is what I mean. When I say an ATR candle, that's this candle right here. This right here. And it's going to be blue if I'm going to go long or yellow if I'm going to go short. So let's take a look at this, and I'll show you exactly what I mean. All of these are the longs for January 20th of 2025. Okay, and obviously these are currency pairs. I am a Forex trader. I say that loud and proud. So this right here is the blue range candle. Okay, this candle range has exceeded its average true range. Okay, so that's why it's turned blue here. This is at 3 a.m. All right, now the 4 a.m. candle, which is the very next one, remember this is the 1 hour chart, has an equal low. There are times where it may be an equal low, not necessarily poke below and close above. You will see that sometimes. That's up to you if you want to take an equal low or not. I don't really favor them, but I wanted to include this just to show you what can happen because technically, when 5 a.m. rolled around, you had price dip below the range right here and then go up. And then it consolidated a little bit, came back down, but eventually did hit the top of the range. This was good for about 25 pips, all right, from 5 a.m. onward, all right, from 5 a.m. onward. I think this was probably a little after 9, but at the same time, if you want to wait for the range high to be hit, that's more than fine. This one right here, I wanted to include losers because this method is not 100%. No method is 100%. I don't care what it is, but everything lined up. So we had a 3 a.m. candle here, the money candle here at 5 a.m. The entry could have been here. This was, I'm sorry, 4 a.m. 4 a.m. money candle here, poked below the range, closed inside of it. The entry could have been here on this candle. It did come back, consolidate a little bit, but then as you see, price continued to go down. So we were trying to go long, but the setup just wasn't there. It hit about the middle of the range, which sometimes it will do, and then continued downward. It was just a counter trend trade. Not much to say there. That's just what happened. All right. So, and you may be wondering why are all these candles black? I do that just to keep my attention focused and looking for blue candles for going long or yellow candles for going short. The black candles I'm pretty much ignoring unless it's a money candle. But blue or yellow, that's the first thing I'm looking for. All right, so let's go through some more long examples right here. We like to see the blue candle at 3, the money candle at 4. Now, here's a trick you can use. If the money candle is kind of sizable and closes back inside the range and it closes back up inside the range a little farther from the bottom of it, for a long example, you can use a fib, draw the fib from the top of the money candle to the bottom, which is what's done here, and you want to enter around the 50% level. If you're familiar with fibs, some people use the 618 and all that type of stuff. No, 50% is fine. Okay, if you can get in on 50%, that is more than fine. Okay, and then price did come up at its highest point. It was close to the top of the range before it did retrace, but this would have been good for about 20 pips. Remember, this is scalping. Okay, these aren't 100 pip moves here we're talking about. Okay, all right. So let me turn this down just a little bit because that's kind of loud. So I do apologize for that once again. Let's go through some more long examples. All right, so we have our 3 a.m. blue candle here. Then here, notice here, this is an example of a money candle that closed outside of the range, but it did not close more than 5 pips outside of the range. So sometimes you'll see this. These are really good. And ideally, you see this money candle low right here. Let me put a little line here. Let's see. We'll do that. Yeah, right here. And I hope that's not too hard to see. It's kind of tricky to maneuver. But this line right here is what you don't want to see being broken more than like 5 to 10 pips. All right, the low of the money candle. This we don't need, so we'll get rid of that. Okay, and I know that line might be hard to see. I don't know if I can thicken it up or not. Yeah, I think I can. There we go. All right. Might be a little too thick. But ultimately, though, this line right here, see how it just pins the line right there? Or how it just pins it, okay, a little bit, and then closes above it, pins it, closes above it, and then boom, price takes off eventually. That's what we like to see right there, okay? So this was good for 25 pips, okay? So that's that. Next up, we have another long example here. This is the same thing. Entry would have been right here in the 5 o'clock hour. Chilled outside the range for a little bit, but then eventually did skyrocket up for 30 pips. So that's another good long example. Now, sometimes you will have a breakout of the range, but for the most part, use the top of the range for your take profit. This is more rare than not. This is pretty much, it can happen. So that's why I wanted to include it. But is it guaranteed to happen all the time? No. So like this example right here is the antithesis of that. So if you use the money candle here, 3 a.m., 4 a.m., trading here at 5 on this open, you get in right here. Pretty painless trade, but as you can see, once it hit the top of the range, then it started coming right back down. So ideally, once again, you want to be out by the top of the range. And this was good for 71 pips. Let's see, same thing here. We have a blue candle here at 3 a.m. 4 a.m. gave the money candle. 5 a.m. entry right here on the candles open. And 58 pips to the top of the range. So that was a painless trade. That was in 1, 2, 3 hours. We were done. Okay, we're not holding anything overnight. This is very painless. This is just straight London trade. You're out. You're done by the end of the day, win or lose. Let's see. This one here, blue candle, 3 a.m., 4 a.m. gave the money candle. This was a 5 a.m. candle. Now this one, it just didn't even bother to retrace. It just went straight up to the top and it went up a little more. So that was good for 25 pips. You had a little bit of a breakout here, but again, be careful because once it breaks outside the range, it can, as you can see, retrace. So, take the meat of the trade. Okay, take the meat of the trade and then get out. All right. Let's see. This one here was good for 25 pips. We have our 3 a.m., 4 a.m., and then on the candle open, 5 a.m., you get in. This is 6 a.m., 7 a.m., 8 a.m., you're done. This was good for 25 pips. Done deal, out the door. All right. And then this one here was good for 50 pips. We have our 3 a.m., 4 a.m. money candle here, 5 a.m. entry inside the range. 6, 7, 8 a.m., we're done. It did break outside the range, good for 50 pips. Like I said, just take the meat of the move and be done because by this time, price is going to probably start to retrace once USA hits. All right. So those are the longs. Let's try to take a look at some shorts here. This is the 1 hour chart once again. 3 a.m., 4 a.m. money candle. Didn't close more than 5 pips. Excellent entry right here. And then price just straight tanked for pretty much the rest of the day. Right there. That was good for 30 pips. Okay. As you can see, this close here was only 4 pips above the high of this ATR candle. So why not get in? Okay. Tight stop loss above this high. This high is what can't be broken right there. As long as that's in shape, you're good. Next trade here. This was a loser. Okay, I wanted to include this as well. Everything lined up. It just didn't pay out. Okay, so we have our ATR candle, money candle here. All right, price consolidated, went down a little bit, and then boom, shot up. So unless you would have got out down here for a break even or a possible small gain, you would have just lost, and that's fine. Let's see. Next one, ATR candle here, money candle at 4, 5 a.m. entry right here. This went down for about 30 pips. It didn't completely touch the bottom of the range, so I do want to include that because that can and does happen before it comes back up. So, that's more than fine. So if it gets close to the range, it kind of starts to peter out a little bit. Like I said, that's when you want to use like the 9 a.m. Time-based stop loss. And because if it's 10, 11, and you've been in the trade since 5 a.m. and it's 10, 11 in the morning, and you've been there for like 7 hours and it hasn't even gone 30 pips, there's a problem with that. Okay, we're not trying to trade that way. All right, this is in and out. Same thing with this one. Okay, 3 a.m., 4 a.m. money candle, 5 a.m. entry, chopped around a little bit. This was at, let's go through this. This is 4, that's 5. This is 6, 7, 8, 9 a.m. candle right here. This doji went down and then came back up. So on this big move here, that's when you want to pretty much just get out. Okay, by 9, you could be looking at a USA reversal, and you just don't want to be in the market at that time frame. Okay, this is straight London, ideally London only. So this one here, the last one we'll go through, 3 a.m. ATR candle, 4 a.m. Money candle here, ATR money candle. That spells entry. We enter at 5 a.m. Price goes down, doesn't hit the bottom of the range exactly, but this is 5, 6, 7, 8 a.m. By 8 a.m., that's close enough to the range to just go ahead and get out. Okay, good for 30 pips, and then it did come back. Okay, then it did come back. Boom. So if you didn't take your profit here, all right, that's the point of getting out by 8, 9 or so. You could lose. Okay, so don't let a winner turn into a loser if you're scalping. Now, some of you may be wondering, well, 30 pips is that's not a lot of pips. I want to make more. Well, keep things in perspective. You can make 20 to 30 pips a day. Start small and scale up. Look at this example here. Let's say hypothetically you're only making a dollar per pip, and I'm big on pip value. Okay, I do not teach scaling in. Okay, I don't teach to add into your positions. I teach to get the best entry you can for whatever dollar amount that you want your pip to be, and that's how you're going to start writing your own paycheck. Now, let's say you're an expert at getting 20 pips a day. For every London session, that's $20. Okay, if you can do $1 a pip, I think anybody could do that, and you don't even need a large account to do that. 30 pips get you $30. 40 pips, $40. Self-explanatory, right? Now, let's say as your account grows, you can start to do $5 a pip. Okay, well now that same 20 pips is now paying you $100, $150. Okay, $200 for 40 pips, $250 in with $5 a pip. All right, you're taking the same trades. Okay, this is a 30 pip trade right here, but instead of making, say, $30, now that same 30 can pay you $150 a day. But let's keep going. Let's say you're at the level where you can do $10 a pip as your account size grows. All right, 20 pips pays you 200, 300, 400, 500, of course, respectively. 20 times 10 obviously is 200, etc., etc. And let's say you get up to the level where you have a fairly sizable account, and you can take a trade that will pay you $50 per pip. Imagine a 20 pip trade paying you $1,000. Imagine making $1,000 a day off 20 pips. And I don't like to say a day, I say a trade, because you're not going to make $1,000 every single day. Like, that's just not very realistic. But you can make $1,000 every single trade. And when you lose, so you might lose 200, 300, 400, but then you make 1,000. Then you make another 1,000. Then you might lose 200, 300, 400, but then you make 1,000 again, right? Or make 2,500. Okay, on a 50 pip trade. And I just showed you that one, right? Let's see, where was it? That was the loser. Where was the 50? It was a long one. Right here, right? So imagine taking this trade and you're able to do 500 or $50 per pip. That's $2,500 off this little simple trade. But you got to start somewhere, okay? If you can't make 50 bucks in a day, you're not going to make 2,500. So start small, okay? Start small, and then you'll get there. All right. So the point is always think scale. You can always scale up your account, be you taking a funded account or if you want to save up your own money and compound it, either way. Okay. So in conclusion, just some things to follow. Once price closes inside the range, it should not go back outside of it. Okay. Wicks to the top of the range are fine. But once it closes inside the range, it should not then, just go right back out. That's what we don't want to see. Okay. If you want to have grace on the money candle, that's on you. In other words, when I say that, what I mean is this. Let's say you take this trade right here at 3 a.m. or you're looking for the 3 a.m. money candle or 3 a.m. ATR candle, and then the 4 a.m. candle doesn't give you a money candle, but the 5 a.m. candle does. All right, so it comes later. It comes 1 hour later. There are cases where that can work, but your highest probability is going to be for the very next hour to give you the money candle, just like this pattern right here. These are your highest probability setups. ATR range, then your money candle immediately after. Okay, so can the money candle come later, like at 6 or 7? Yes, it can. I've seen it do it. But do I like that though? No. I want immediate results because I'm only scalping. I'm not trying to day trade here. I want to be in and out. So the best odds are back to back. ATR range, money candle, entry. That's it. Okay, 3 o'clock, 4 o'clock, 5 o'clock. That's why I call it a 3-4-5 model. All right. So, if you want to experiment with that, though, that's on you. So you have two exit formats, though. 5 to 10 pips above the higher low of the money candle. That's your sign to get out. Or around 9, 8:30, 9 o'clock, okay, before USA session starts, you want to get out, Eastern Standard Time, okay? Start small and scale up. 30 pips a day can earn you a good living, as I've just shown you. And so this is really all you need. This is the London Goldmine. If you can just check your chart once a day during London in the 4:30 to 5 o'clock hour and find these entries, find these ATR candles. Again, the link will be in the description for the ATR candle indicator. Okay. You're going to want to go ahead and take advantage of that and be sure to see where you can get in. And one last key point that I want to mention as well. Okay. One last key point. Remember that I'm going to add this for those who stuck with me. I appreciate you. Is the money candle at the is the money candle at the higher low of the day? Okay, very important. Sorry I didn't include that earlier, but that is a non-negotiable. In other words, you're not just looking for a yellow candle at 3 a.m. and think, okay, well, I can go short if a candle pokes above it and closes inside of it, and it's not making the higher or low of the day. So ideally, you want to see the higher low of the day being made at 4 a.m. using this method. Okay, so that's one thing I did leave out, but you want to remember that as well. Okay, so if the money candle at 4 a.m. creates the higher low of the day, you are in, you get into the trade, and then you just ride it on down through the end of the London session. So I appreciate your time and attention. Thank you so much for watching. Any questions or concerns, don't forget to leave a comment below. And you guys have a great rest of your day. Take care.